Hey guys, welcome back to Lamb's Cryptoverse, and today I'm very excited because today I'm going to show you the second of two composite timing indicators for Bitcoin. I mean, imagine that. Imagine having something that tells you how much risk there is in the Bitcoin market, meaning whether or not it's a good time to buy, whether we're at the top of the market or the bottom. Well, they actually have two composite indicators, and I keep saying composite, I'll tell you why in a minute, but they have two indicators that actually tell you when to buy Bitcoin. So the first one is by Cohen Talks Crypto, and it's called the CBBI indicator, which I already talked about in a previous video. So today we're going to focus on a Bitcoin timing indicator called the total indicator of risk, meaning Bitcoin. And this was developed and designed by the infamous Benjamin Cohen, who heads into the Cryptoverse, which is not only a YouTube channel, he actually has a paid website that gives lots of information on the cryptocurrency market. So let's get started. Before I go to the next slide, I wanted to specify why I'm saying the word composite. And that's because a composite indicator puts all these indicators together to give you one stochastic, one indicator, whether it's a good time to buy Bitcoin or it's a bad time. You need to seek nowhere. You don't need to look anywhere, like no other charts, no Glassnode, no crypto chart. You don't need to look at any other chart or indicator except this indicator, according to Ben Cohen and what's his name? Cohen Talks Crypto. So before we go on, I just want to say that I myself, I don't like to use composite indicators. I like to look at charts and factors that are outside what I'm looking at, or even if I'm looking at a chart, I want to know what's beneath the chart, what's behind the numbers. That's just the way I work. Is it a lot more work? Yes, it's a huge amount of work, a lot more work, but it's how I do things. It's how I gain conviction. So I'm just going to give you a few of the things I look at besides what I'm about to present to you today, and I'll go through them quickly. When I look at the growth of addresses, because remember, addresses are behind what's called Metcalfe's law, right? Basically the strength and the valuation of the network basically is related to the square root, the square of the number of users. So this is very important. And then you can look at the number of transactions. That's the second bullet point. The amount of fees, how much inflation there is. Moving averages. A lot of people like to look at the 50-day moving average versus the 200-day moving average. Other types of technical analysis. I just saw a video on Real Vision that had the inventor of the DMARC indicator, Tom DMARC, and that's a very interesting yet bizarre and cryptic indicator, but it seems to work for people. And then there's the halving cycle for Bitcoin, the production cost, and Bitcoin dominance. And over here I wrote relative value, but that's what I meant, Bitcoin dominance. And of course there's sentiment and regulation, political events like war, feast and famine, COVID-19. And then there's a hash rate and a difficulty rate, and we see that in Bitcoin mining. And most importantly, which is not included in this composite index, is liquidity. I think that's the most important thing you need to look at if you're trying to time Bitcoin. You need to know where we are in the regime, the tightening regime of federal fund rates, right? Because fund rates keep going up, and sooner or later they're going to be, the Fed's going to be stopping raising of the Fed funds rate, but it hasn't happened yet. But it will be soon. So it's good to keep that in mind as I present this composite indicator to you. So this timing indicator, again, like I said, it's created by Ben Cohen. He calls it the total risk indicator. It scales from 1 to 0. 1 being the highest risk, so you have to be bearish when you set 1, and 0 at the lowest risk. And And Ben stresses that even if the indicator is low, it needs to stay there for a period of time to truly be effective. Now, he's grouped these components of that composite indicator into 3 types. 1, price metrics, 2, on-chain metrics, and 3, social media. And then below, I listed some of the components, like the HODL ratio, the pure ratio, the Bitcoin market cap. The list goes on and on. You can halt this video and take a look at the components. So here's a risk indicator. And as you can see, it does a great job. Let's focus on market tops. It does a great job at pinpointing the market tops. You could see here in 2011, it pinpointed precisely the market top because it reached 1. So that's the red line here. And look, you see, you have to look at the right axis. The right axis goes from 1 to 0. And you can see it was almost at 1 during the top of the Bitcoin market in 2011. It was around 0.9 or 0.9 during the top of the Bitcoin market in 2013. And it was almost literally at 1 during the top of the Bitcoin market in 2014. And the same thing with 2017 and in 2021. I'm and some other people, including Ben Cohen, we're calling the top of the Bitcoin market in April of 21, but there was a double top, so just be aware of it. And so for the second part of that top, the double top, it was around 0.75. Now let's look at the market bottoms, where it pinpointed the bottom. Again, it did a great job at pinpointing the market bottom. It hit around 0.1 in 2012, even below 0.1 in 2015, and notice how long it took to reach that bottom. In other words, I should say, it stayed there at a long time, almost a whole year. So you could have accumulated Bitcoin the whole year from 2015 till November 2015, almost to December 2015. So there's no rush. There's no need to rush and buy Bitcoin when this indicator falls below 0.1, I should say. And same thing in 2019. It stood there for a long time. Yes, it was shorter than 2015, but still, this is not a day or even a week. This is a few months during 2019 where it was below 0.1. Now, this time, we haven't reached that level. We're at low level. We've been hovering around 0.2, which historically is a low level. It's near a buy level, but we're not at 0.1. And if you drill down into that, it's because of social media. Remember, I told you there are 3 parts, 3 groups to this component indicator. And one group of that is social media. And social media has been higher than normal. And you can see it spiked here in November. And I think you know why. That's because of FTX and everything related to that. And some may argue that the FTX issue is related to the Terra Luna 3AC issue. So it's all related. Voyager, Celsius, it's all related. So this may just be an extension of what happened with Terra Luna. But basically, let's just say that the spike in November is due to FTX, and this is still ongoing. There's a domino effect. So I think it's going to be a while before there's a lower social media on Bitcoin, especially since now Congress and Elizabeth Warren are taking a look at and investigating FTX. So you know social media is going to remain high for Bitcoin. So we haven't reached bottom yet. And just some comments, and I mentioned them already, Ben's comments specifically. Here, I already mentioned that he talked about the social metrics are pretty high, and I talked about it's because of FTX. But the third comment I didn't talk about, and Ben says that the Bitcoin market truly bottoms, like it hits a real bottom when there's apathy, when no one's talking about Bitcoin, when people give up and they stop caring. And it's pretty obvious we're not there yet. So the key takeaway is that yes, Virginia, there is a Santa Claus and you can time Bitcoin, but with a little bit of luck. And you need to be patient. Do not chase it. Do some DCA. And always analyze, or at least that's how I do it. I analyze in a holistic way. I'm still paying attention to what the Fed's doing. I'm not going to be aggressively buying Bitcoin, I should say, if the Fed is still raising rates. Okay, if the Fed holds rates high, which I think they're going to do, that's okay, because that's still a slowing in the rate of change of raising rates, right? If the Fed is raising rates aggressively, meaning frequently, and 75 basis points instead of 25 basis points, that's pretty aggressive. So if maybe they slow it down to, I predict, 50 basis points in the December 14 meeting, and then they hold it there, or maybe they raise it from 50 basis points in December to, maybe they raise it to 25 basis points in January, February, and then they hold it. That's a good sign. That means the Fed's hawkish, but less hawkish than before. Then I think we can buy a Bitcoin aggressively if no one cares about Bitcoin. We want to see the social metrics slow down where no one cares about Bitcoin anymore. Well, I hope you folks like this video. I think there was a very unique indicator to find. I think it's a great indicator to have in your toolbox. Well, thank you all for listening, and please don't forget to like us and subscribe to us. See you later. Bye-bye and happy holidays.